Hi, I'm Robin.
Hi, and I'm Bill.
Welcome to Not the Retirement Show. Today we're chatting about why owning mutual funds can be helpful in retirement. Bill, what's a mutual fund?
A mutual fund is an investment vehicle. It's like an investment club where a whole bunch of people, probably from all around the world, sort of accumulate their investments. So in other words, everyone says, okay, I'll put in $100, and everybody says, I'll put in $100. You've got 10 people, that's $1,000. You take the $1,000 and then you invest it in the stock market. I mean, that's about as simple as it comes. So it's a mutuality. Obviously, you expand that dramatically when you get into, big time, real time mutual funds on a global basis.
Okay, for us dummies, a mutual fund is something you can buy like a stock.
Well, what happens is that the mutual fund, when it's created, will create units. So you can buy units in the mutual fund. So you can say, look, I want to spend $1,000, and if the value of the unit at that time is $1, you're going to get 1,000 units in the mutual fund. But that value, that $1, is the same for everybody. Everybody's got the same value at that particular point in time. Now, hopefully the unit price goes up, or sometimes the unit price may go down, but you're all in it together. And what happens with the funds that are accumulated in the fund itself, then the mutual fund manager, the professional investment manager, is going to take the accumulated funds and buy stocks and shares, or buy bonds, or something like that, various types of mutual funds, which we'll get into in a minute or two.
Okay, so you just said another really good word. You used the word managed. So a mutual fund is managed by someone, and why is that a good thing?
Well, a mutual fund is managed by a professional investment manager, and it's something that, particularly in retirement, you want. I mean, if you're bold enough to do your own investments, that's fine. If you're capable of doing that, that's okay. But what you want to be sure about in retirement, in particular, is the safety of the money. In other words, if you put in $1,000 into a junk bond or a high risk stock, there is a possibility that you could lose that money. Whereas the mutual fund, and you have to choose your mutual funds properly, and we'll get into that in a minute as well, but the mutual fund will give you the ability to sleep at night. It's safe, and it's managed by somebody who knows what he's doing. Now, if you know what you're doing, good for you. Personally, I wouldn't do that. I would let the investment manager run with it for me.
This is a good time to remind everybody, Bill and I are not certified financial planners. We share this information for your education so that everybody can learn together. We highly recommend that everybody who sees this video consult the investment professional of their choosing and ask as many questions as they can before making investment decisions. Okay, so mutual funds, why, in your personal opinion, are these a good thing in retirement?
Well, because, as I say, it's professionally managed and it's safe, but there are any number of different types of mutual fund. Now, a mutual fund is a mutual fund. They're all basic same investment type of structure or legal type of structure. They're all the same. You accumulate the money, you put it into a fund, you create units, you buy the units in the fund, you hand it to an investment manager, and he or she goes off and invests it. The question then becomes, okay, what do they invest in? Okay, so they can invest in the stock market. They can invest in New York Stock Exchange, shares, or London Stock Exchange, or the Tokyo Exchange. So that's, equity markets, they call that, which is stocks and shares. They may decide to go into the bond market, so government bonds, for example, treasuries, etc., etc. But there's a vast range of types of mutual fund, and each type has a level or a degree of risk associated with it, which is why, particularly if you go into stocks and shares, again, I mean, if you know what you're doing in the stock market, go for it. But I mean, a professional investment manager is on it every single day. They're getting reports, research reports. They know what's good, they know what's bad, they know what's coming along the pipelines, etc. They're in a much better position to know what to do, in that type of mutual fund. If you're in a what they call a fixed income fund, like a bond fund, etc. They're more stable. They're not so volatile. You know, prices go up, prices go down. Stock markets obviously do, but you know, bond funds, etc. typically, you know, trade in, you know, in a narrow range. So by investing in that type of a mutual fund, you're not going to see a tremendous amount of change over time. Hopefully you're going to see an increase in value, but maybe you can invest in a mutual fund to get dividends, to get cash coming back out, particularly in retirement.
Okay, so and the reason you'd want to do that is so that you can maintain a stable monthly income month after month after month in your retirement.
Well, yes, a stable income month over month, but also to make sure that you don't run out of money.
Oh, good point.
I mean,
Yeah,
that's
absolutely.
the key, because at some particular point in time, you know, things happen. Obviously, let's say, but you know, you would probably like to leave some money for the kids. Well, maybe not, of course.
Well, assuming that you have some. Okay, so if you've been watching this and you're intrigued, but perhaps still confused, and if you're a novice, why wouldn't you still be confused? How can you learn more about these things?
Well, I think online these days, there's so much information. Just be very, very careful where you go. Go to recognized authorities, whether that's like a stock market, New York Stock Exchange, for example. But there are so many places. Everybody knows the names of high quality, be them banks or financial types of companies, investment houses, etc. 99 times out of 100, you're going to get really good quality information. Go up, read about it. And as Robin said, maybe you want to look at an investment advisor just to be sure, am I doing the right thing? Because the investment advisor will hopefully listen to your circumstances, look at your financial position today, where you want to be, where you need to be over time, and adjust accordingly. And that's on the risk factor that we're talking about. And we'll probably say, in your case, this would be a really good mutual fund to look at. Or in your case, it may be a different type of mutual fund to look at. That's where you need the professional advice. You can fly solo if you want. That's okay. But the professional investment manager will have his or her finger very much on the pulse.
Well, if you're still watching, we must have said something helpful. So why not consider subscribing to our channel? And we'll talk to you again soon.